Well, hello, everybody, and an early happy Thanksgiving. My favorite of all the holidays. Absolutely love everything it stands for: family, friends, gratitude. I hope your hearts are full this year. Let me just express my appreciation for all of you who I have had the opportunity to work with through the years. Some of you, it could be 4 decades. Pretty amazing. Although 4 decades. You had to start it with me young. Maybe you did. Anyway, glad to have you with. Welcome. Let's get to this. Just quick reminder that everything that we do here is for educational purposes only, not intended as investment advice or individual stock recommendations. So when you are considering the market, these are the things that need to kind of run through your checklist. Fundamental influences. What's causing the market to do what it's doing? We'll talk about that. What's happening directionally with the overall market and market sentiment? How the various sectors performing? And then finally, you drill down and start looking at individual stocks. So with that in mind, what's moving the markets? Well, OpenAI founders, they're heading over to Microsoft. I guess they were ousted. I think it's a big pickup for Microsoft. Microsoft stock moved up, which I was happy to see. I've been doing covered calls on Microsoft for some time. It's been a very, very profitable holding. LEI, the leading economic indicators, they fell for the 19th consecutive month. Great for the Fed in terms of what they're going to do relative to interest rates, but not good for the economy. Russell 2000 has been making a comeback, but I got to share a little something with you about the Russell 2000 in a bit. 10-year Treasury ticked up just a wee bit. 4.467, we'll take it. It was above 5. And oil's holding pretty steady in the high 70s. What to watch this week? Well, given the fact that we've got Thanksgiving, not a whole bunch. We had the LEI come out today. There's a little bit of Fed speak today and tomorrow. Existing home sales on Tuesday. Initial jobless claims were bumped up from Thursday to Wednesday. Consumer sentiment is delivered. And then on Friday, we have the PMI numbers, both services and manufacturing, see if they're expanding or contracting. Both of them are kind of borderline. Let's take a look at the charts. Let's look at the S&P 500. Boy, is that an improved sight? Is it not? Look at that. Well above the 50-day moving average. On top of that, we see that the 50-day slope is now tilted slightly upward. The Qs, they're in great shape. Look at that. Wow. Boom. Isn't that nice? What a difference a few weeks makes. It always amazes me, though, how quick investors are to panic. Last week's heat map, the only real drags, the big one was Walmart, bad earnings, Cisco, ditto. Tomorrow, by the way, we've got NVIDIA earnings coming out. That should keep things interesting. And then year to date, I'm telling you, if you're in the right stocks. So Lilly, Tesla, Meta, Google, Amazon, Broadcom, AMD, Intel, NVIDIA up 240%, Apple, Microsoft, Oracle, Adobe, and I can tell you, I didn't miss on any of those. I had trades this year on every single one of those stocks. Didn't take a whole lot of talent. They were over here going, hey, look at me. I'm going up. And I've got a great business model. Market's fairly simple, when you know what to look for. This year, simpler than almost any year I can remember. Year-to-date returns by sector: technology, communications, crushed it. Industrials, materials, financials, and the defensive ones: real estate, energy, healthcare, staples, and utilities, losers. So it's bizarre, as there are investors out there who this year made 50, 60, 70% on stocks. Some have made hundreds of a percent on options. And then others in the same market have managed to lose money. It's just people's ability to perceive what's going on and have a methodology. Market breadth. I always like to look at the new highs versus new lows. That's finally got flipped on the New York Stock Exchange. 189 new highs, 117 new lows. On the NASDAQ, we still have more new lows than new highs. So we got some more work to do. What that tells you is the stocks that have dropped a lot. That's what that tells you. The big money this year: large cap growth. That's where it's come from. Right now, 5 stocks represent 25% of the S&P 500. We've never had that in history. Now, here's the thing about the Russell 2000. 40% of the companies in the Russell 2000 have a negative earnings. Stay away from those. Before you ever buy a stock, make sure the thing's making some money, would you please? 74% of analysts for the next 12 months are now forecasting a soft landing for the economy. I don't want to brag. I've been saying that for a year. And what was my thesis based on? Look at the labor market. Look at the health of the overall economy. Rising GDP, full employment, wages going up. That doesn't spell a recession. That's just common sense. But the world lives by hyperbole. Let's over-exaggerate things. And boy, people love to pay attention to the individual who's yelling, the sky is falling. No, the sky's not falling. Look, I'm looking outside. Just hanging in there. Continuing jobless claims continue to rise. Good when it comes to the Fed. Lower probability of them raising rates. In fact, I'm going to show you there's almost no chance, at least right now, that they're going to raise rates. Here's something that I thought was kind of interesting. If you look at the rate of return per day this year, the market loves Monday. On Mondays, the market's up 70.4%, and Fridays up 55%. Not so much Wednesday. Kind of like Wednesday from the Addams Family, down almost 30%. Now, is that a strategy? No, it's just interesting. Investor sentiment is now in the greed category. Well, you'd expect that. Market's up 3 weeks in a row, and people are fickle. Fed probabilities of raising rates on my birthday in December, they're saying 0 chance. 0 chance at the end of January. There's a 30% chance that they cut in March. On May the 1st, there's a greater chance that they cut than not. And I'm going to tell you, it's not going to happen that fast. Not unless the economy begins to implode. I'm looking for a rate cut second half. And by the way, that's what would favor the market the most. A rate cut now would have Wall Street going, hey, what's the problem? What does the Fed know that we don't know? Let them pause for a while, then cut later on in the year. All right. Well, let me reiterate what I said earlier. A happy and blessed Thanksgiving to all of you. Stay safe, use your head. I know this is a time of year where people tend to, do a little, just don't drive when you, for your benefit, your family's benefit, and for the rest of us. How's that? All right. Well, good. I'll be seeing you all next week. Until then, be blessed. Bye for now.